We're here at the Metals 100 coverage at the PDAC 2024 in Toronto, Canada. We have RoadMinerals here with us today. How are you doing, Tim?
Good, Gilbert. How are you?
Not too bad. It's been a long time. So did you just fly in from London?
Last night, yeah.
Okay. Yeah. It's been a long flight, I guess. So maybe you can just start off by telling us a bit about the background of your company, Royal Road.
Okay, so Royal Road, the background. So Royal Road's been around since 2010, and you remember, you're old enough to remember Lydian, and we basically took the exploration team out of Lydian once we found and started developing a gold mine in Armenia, and then started life actually in Turkey, exploring on the border of Turkey, Syria, and Iraq in what's called the Tigris Belt, looking for copper and gold. Then moved to Colombia. That was because of the rise of ISIS at that particular point in time, 2015. And since then discovered a copper gold porphyry in Colombia, discovered a couple of assets in Nicaragua, exchanged our Nicaraguan assets for 100% of the Colombian assets, then suspended Colombia after the election of the current President Petro, who's not supportive of mining. And we've moved off to Saudi Arabia and Morocco. We've been there for the last 12 months. We've been pretty quiet over the last 12 months while we've made this transition. And now we're busy rebuilding the enterprise through exploration on two assets in particular, a copper gold intrusion related asset in Morocco, which I've just come back from. Happy to talk more about that. And in a very early stage tender license that we won, copper gold as well, also in Saudi Arabia. And in both countries, we've got those two projects that we're sort of focused on. And then obviously we're doing exploration and opportunity identification throughout both of those environments.
Sure. Maybe just start off by talking more about the kingdom, Saudi Arabia, because not a lot of people know about that in terms of the mining side or things. Like we talk about the joint venture with MSB.
Yeah, so Saudi is trying to wean itself off petroleum as the most significant contributor to its GDP. And as part of that program, it's been doing this for a while. As part of that program, mining is what they call the third pillar of Vision 2030. And Vision 2030 is a deadline that they've set themselves to demonstrably step away from this petroleum-driven economy. And so they're very supportive to the extent where they will lend you 75% up to $800 million of your initial capex once you're at that stage. There are royalty holidays. They've established a geological database modeled on the Finnish GTK database, so you can access all of your information, and they're open for business essentially and very supportive. So that's the first thing. In terms of its exploration history, it was a fairly busy environment from a early stage kind of research and development level back in the 70s and the 80s. It saw quite a bit of research interest from bodies such as the USGS and the BIGM, the French Geological Survey. There was some exploration investment from Rio Phoenix, so that's Rio Tinto's UK-based business back in those days. And since then, not a lot. And so it's kind of wide open, on the one hand, wide open conceptually in terms of an exploration environment, very easy to access. Access to information is terrific. They're flying the whole shield with 200 meter line space magnetics, but at the same time, it's a very grassroots environment. So there is no, there's no kind of mining property market. You're out there, you've got to find your own assets. So that's Saudi. In terms of MSB, so MSB is one of Saudi Arabia's largest diversified holding companies. It owns 50% of MBL, Modern Building Limited, which is Saudi Arabia's largest construction company. And so it's a 50-50 incorporated joint venture registered in Jeddah in Saudi Arabia for Saudi, for our projects in Morocco as well. Anywhere else we might decide to work together from time to time. And it's a find it and build it type scenario. So quite different from what we were before.
Okay. So you also mentioned a bit about the Morocco. the project there, the copper project. So what's the potential there? Can you talk about it more?
Well, so Morocco is kind of similar in a way. So, both of those countries, first of all, our joint venture partners are very influential in Morocco. They're busy on construction projects there. So we, in a way, it's an organic move for us from Saudi to Morocco, with Royal Arabia and MSB. That's the first thing. Secondly, Morocco wants to triple its revenues from mining by 2025, by next year, to $1.6 billion. So again, it's supportive. It's a 17.5% flat tax rate. There's no royalty, but you pay a sort of production fee within your region. Highly prospective, especially for copper, especially for sediment-hosted copper, which is our main focus in Morocco, and intrusion-related copper. And the project that we're developing there, Alawana, I've just come back from 10 days, and that 10-day was really, are we going to drill it or not? And we are, is the good news. So, and for us to want to drill something means that we can see, conceptualize, and it's very important I say that because this project hasn't been drilled before, that we can see or conceptualize potential for about 1 million tons contained copper. And we can see that in Alawana, which is an important point. Otherwise, we wouldn't be drilling it. I think, if I may sort of expand on that a little bit, the market's changed a lot since we first met. And, I don't think many other company CEOs feel the pressure to drill unless we absolutely decide that we want to. And I think that's, in a way, that's a sensible market, and so we've been very careful on, and we still are being very careful in Alawana. We've done a lot of work. Detailed soil geochemistry, currently infilling, magnetics, tunnel surveying. There's historical French tunnels and French open pits on the project, mapping all of that, making sure that we're very, very certain that we've got that potential before we want to drill it. And we're at that stage now, so that's good news.
Yeah, interesting to hear. We also talk a bit about how the market sentiment these days. Maybe we can share more on some insights there. We talk about people now chasing some of these big AI stocks, technology stocks out there. There's money out there, but the junior space and the mining space seems to be not so unloved. So why do you think that's happening? Okay,
so the junior mining space is speculative money. Okay, and that's quite parochial. Okay, so you represent some Chinese investors, which is a market for speculative money. Speculative money exists in Canada, it exists in the United States, maybe even more so than Canada right now for mining stocks. And exists in Australia, to a lesser extent in the UK, and to a much smaller extent in Europe, and almost nowhere else. Okay, so a good example of that is, you can't go to Saudi Arabia and speak to the Saudis about speculating on exploration. They're not interested. So the markets for, I think that's the first point. The market for exploration is those parochial jurisdictions or environments, investment environments. So right now, so then you have to convince those environments to invest, in our case, outside of Canada, North America, Australia, and elsewhere. And I think since COVID, that's got a lot, I don't want to go into that, but that's got a lot more difficult to convince investors to risk their capital outside of their own jurisdiction. And that was perhaps, well, I don't want to go into that, but it has something to do with how we individually manage COVID, and then what that did for investment risk. That's the first thing. So I think there's been a natural sort of post-COVID influenced decline in exploration interest. Secondly, I think money's as you say, money's moved off obviously into those tech stocks. That's happened before, and so the last time there was a real market for exploration was when that all broke down. 2004, 2005, and so I think there's a chance, and I'm going to say there's a chance because I don't believe that the past is key to the present. I think there's a chance that markets might break down again. That's what it's going to take. I think we probably agree on that. Markets would have to break down again for money to come back into our sector. But I don't think we can, as explorers, I don't think we can bank on that. And I don't think we should be sitting here, fingers crossed at the PDAC, hoping that that's what's going to happen next year or sometime later this year. And so, we made that decision in November of 2022 that we're not going to sit and wait. We've got to go and do something. So that's the market sentiment. How do we respond to it? We respond to that by going to Saudi Arabia, going to the Middle East, which is a new, in my view, an obvious new emerging financial market. Obvious new emerging financial market, but perhaps not so obvious, a new driver for the mining industry and for financing the mining industry. And we did a 50-50 JV, so we split the company in two to ensure that we've at least got 50% of our money coming from a sound source, which are our partners, MSB. And now it's our job to try and bring the market along. And so, they're now investing in a different entity, and I think it's more attractive to be investing in an entity nowadays that is committed to exploring and developing, which we would be because of our partnership with MSB, as opposed to this old find it and flog it type model, which, to be honest, only lasted for 5 or 6 years, from up until 2013, and then since then it's been a very difficult model to sustain in the market. I suppose that's the project target generator type thing, which is getting much, much harder. So I think there's been a structural change. If there hasn't been structural change, we've certainly preceded one by doing the deal that we've done in Saudi Arabia. And I think we've done that. Other companies and colleagues that I'm speaking to here this morning so far are doing similar type things to ensure cash flow into the future, because sentiment, and that's all sentiment driven, if you know what I mean. So we've responded, and it may mean the market has to respond or change. It's been changing in any case. Volumes are high, so which is a good thing, I think. So prices are low, but volumes are high, so money is changing hands. And I believe there's a new vision for our sector now tangibly driven by the market.
There's some good insights there. And let's talk a bit about your company in terms of, usually you like to look for copper. So what's your thoughts? Is that copper is your favorite thing, and your team has the people to really explore and look for the discovery for copper?
Yeah. I mean, copper bothers me a little bit in terms of pricing, obviously, not so much in terms of demand. I think there's been enough work done on that to, assuming we go through this electrification process, and that's not just cars, it's rewiring the entire grid. But assuming we go through this process, and I think it's fairly clear that, that there's significant global demand for copper down the line. In terms of finding it, we're not looking for porphyries. Okay, so for those of your audience who don't know what porphyries are, they're low grade, bulk tonnage, some of the largest copper producers in the world, actually, the largest, Escondida. But they're increasingly harder to find. Some companies are spending a lot of money trying to drill those at depth with economics that we can't quite, that require a much higher copper price. We think that that's not the target to look for anymore. And so our focus is sediment-hosted copper in Morocco and also in Saudi Arabia. And these are copper deposits that form almost, I'm going to generalize massively here, but just for the sake of making it technically simple, almost like petroleum deposits, sitting in sandstones. And the technology on the shales, and the technology to mine those has developed so much now that you can mine them very cheaply using adapted sort of cold technology. They're close to surface. They are big. They're not as big as some of those porphyries, but they are big enough. And then the other target style that we're looking for are these thermal aureole. So that's related to granites, sitting around the edge of granites, which we're developing currently. Both of our projects, in fact, that we're developing, one in Saudi, one in Morocco, are what you call thermal aureole projects. So our search for copper is not the porphyry style model. It's this sediment-hosted style model, and also thermal aureole. So on surface, higher grade, perhaps not as big as the porphyries, but certainly be brought into production well before many of the traditional sort of porphyry targets that people are drilling right now.
So in summary, why should investors, let's say if it's making money, should they take profit? Why should they're holding some really big tech stocks? Now, why should they take profit and put some of the money diversified to a riskier junior mining company like Royal?
Oh, I think they'd be crazy. Well, okay, and I'm going to say this honestly, and I'm not going to, you know, let's just not say RYR, let's just say the mining sector. I think you'd be nuts to keep betting on this hockey stick, you know, kind of growth in tech stocks. $2.03 trillion, I think, today is the market cap of Nvidia. It's an important company. There's no question about that. And so are Apple. And so, you know, and so is Microsoft, and I think Saudi Aramco is still up there in the top 4 or 5. They're important companies, but you'd be crazy because we've seen this before. We've seen the market break down. You know, we had a lot of soft landings or dead cat bounces, whatever you want to call it, in the tech stocks. At some point, that is going to break down. And where's it going to go? Well, you know, if gravity's any guide, then it's going to have to come down to the lowest point, which is us right now. And that's what happened before. That's what happened after 2008. You know, money flooded back into our sector, and we had that massive bull run, 2009, 10, 11, 12, and then 13 crash. You know, I can't imagine why you would be betting all of your money on those tech stocks right now.
Thank you for your sharing your insight with us here today, Tim.
I'm not sure if that was a very convincing argument, but you know, I'm speaking of myself, and I'd be doing
Indeed, yeah. Thank you for your time here with us, Tim.
Thank you, Gilbert.